Welcome to another episode of Purchase to Profits. I'm Seth Ferguson. Make sure you hit the subscribe button so you don't miss our daily interviews with successful real estate investors. And I've put together the top 7 key market drivers I look at when analyzing a real estate market. Go to sethferguson.org to get your free copy. Our guest today is a Detroit real estate developer who's committed to helping the city's transformation through buying, rehabbing, renting, and selling investment-grade real estate. Brent Maxwell is the CEO of IPS Realty. Brent, welcome to Purchase to Profits. It's great to have you on the show.
Wonderful to be here, Seth.
Yeah, really looking forward to it. So let's kick things off and talk about your real estate goals. I mentioned in the intro that you're looking to help transform the city. So what are you looking to do with real estate?
We buy, rehab, and flip houses. We do multifamilies and small apartment buildings. And we're also looking at bringing in some disruption to both the property management and the acquisition of properties. So
nice. Is this top secret disruption, or do you want to elaborate? Yeah.
No. We just have really good processes and systems that we've been developing over the last 15 years, and finally got them in a point where we think they're franchisable. Certainly.
Oh, cool.
I'm not saying that we're going to do that, but we got it down to a pretty good science where it's measurable, repeatable, and can be scaled. So we're looking at expanding our market in the city and also opportunities to help people elsewhere.
Nice. And so when you look at your business, maybe annually, or I'm not sure if you do quarterly or annually, do you set targets for yourself in terms of dollar volume? Like, how do you plan ahead?
Dollar volume is kind of a lagging indicator. So I guess the answer to that question is we have weekly meetings where we cover our to-do list and things that are our weekly measurables. We have a weekly operations meeting, a weekly sales meeting, and then we have a quarterly meeting. This is all we follow a slightly revised version of the entrepreneurial operating system, which is from one of our local people here has written that and developed it. You might be familiar with the books Rocket Fuel and Traction.
Yeah. Traction's a great book.
So we actually have adopted those processes, and we figured that while we are entrepreneurs, we're not entrepreneurial scientists. We focus on real estate. So rather than try and reinvent the wheel there, we just use that philosophy and that methodology. So we have quarterly same page meetings. We set our rocks, which are basically goals for the quarter. So everything's measurable, attainable, specific, and that's how we operate.
Yeah, and it sounds like you've got the system side down pretty good. So I think the thing that I see a lot with real estate investors when they first start out, they don't have the systems in place and they try to do everything on their own. So what has helped you create and really put those systems into place with your business?
Well, we've spent a lot of time developing the systems and continue to do so and refine them on a daily basis. And we try to do nothing on our own.
Yeah.
Yeah, that whole I call it the millionaire mindset of I'm going to do everything and micromanage everything. It works for a while, but it's maddening and extremely frustrating. At some point in time, you got to let go of that and rely on the systems, processes, checks and balance to kind of allow you, a freedom, which is a reason why a lot of people get into real estate investing is, I don't want to be tied to trading hours for dollars, and I also want freedom. But if you get into it and then it becomes a business where you're micromanaging everything, then you have no freedom. So delegation and outsourcing, whether it be locally, statewide, in the USA, or even in some cases outside the USA. We have some software people right now in India working on some stuff for us. And we have people that we've worked with in South America regularly, and in Pakistan and all over the U.S. and mostly in Detroit though. So yeah. We try to leverage our time through working with people who do what they do very, very well. Yeah. And what we do very, very well is find and underwrite killer deals and then structure them and then deliver quality product in a timely fashion. By that mean flips or rental properties.
Yeah. And what drew you to Detroit? Because I knew you were going on a different career path before you got into real estate. So what drew you to Detroit?
As far as the market for real estate goes?
Because, I think, you're you're in the intro. I mentioned like you always say that you want to help transform the city. So what was it that drew you
Yeah,
to say
absolutely.
I want to do this? Yeah.
Well, I grew up in Metro Detroit, and we're still involved in being a part of its rebirth. It's gone through a lot of changes in the last 10 years with the big crash, which has hit Detroit harder than any other market in the country. And we just started noticing here how bad this is. We just moved into a new office space, 5,000 square foot, for operations and infrastructure. So this is where there's some paintings here. One of the
Oh, nice. That's
I
cool.
love Detroit. I love my city. I think that if you want to get spiritual and emotional about it, Detroit is the backbone of America. The middle class was built in Detroit, and Detroit is a metaphor for everything that can be good and a lot of things that can be bad. So I think that the success of Detroit is kind of a canary in the coal mine for the success of the middle class of the rest of the country. So it's very, very necessary for Detroit to be successful as a market. Otherwise, it's going to affect everywhere else eventually. So if we can do it here, then we can do it anywhere.
Yeah, and I know looking nationally, Detroit's gotten a bad rap. So how important has been like your local knowledge to your success in the city?
I think it's crucial. We've talked about expanding and looking at some other markets and to work in, and I think it's absolutely essential to work with people in the market that are market specific and local market experts, and to not discount that in any fashion. There's absolutely no way I could do what I'm doing in Detroit from Phoenix or San Jose or anywhere else without having the local infrastructure that we've got here built, which in this case is simple because simple for us because we've been in it for 15 years. We do good. We don't go around anybody. We don't screw people over. We don't do our business that way. We really try to take care of everyone involved in deals and make sure that everyone gets their cut, because there's always another deal around the corner. So we're not that cutthroat kind of thing. We have an abundance mentality as opposed to a scarcity mentality, which a lot of people don't get. So but you've got to have that local infrastructure and the boots on the ground, for a lack of a better metaphor, that allows you to work in an area. We pride ourselves on grade A results on Class C properties, and that is a constant challenge to deliver that. Anybody can manage a Class A property. My grandmother can manage a Class A property. She died 10 years ago. I mean, it's really probably not much more difficult than that. People are rushing to you on the 28th of the month saying, the 31st is a holiday. I want to make sure I get my rent in and paid on time. I don't want to be late. You don't have that very often in Class C, Class D properties. So, we have it down to a science, and we're able to generate consistently, 90% economic performance, economic occupancy on our portfolio as a whole. Yeah. So 95% occupancy with 95% performance. That's the metric that we hold ourselves to every month.
That's a good target. Absolutely. Yeah. Nobody would complain with that.
They complain. They still find a way to complain, but that's okay. Tenants complain, owners complain, partners complain. It's okay. People have a right to voice their opinions. But the thing is, after a while, you get the tough skin. The rhino. Here's my desktop mascot. Thick skin, determination, persistence is key. Passionate persistence. And that's what drives me, and that's the very first two words of our core values for the company: passionate persistence.
Yeah. And you mentioned that Class C niche that you're in. Was that always your focus as soon as you got into it, or did that evolve over time?
Yeah, it's always been low income, multifamily, and low income single family. So yes, it's been our focus since the beginning.
Okay, and
it's where the high returns are if you do it well.
Oh, absolutely. But like you said, like the management side becomes so important when you're at that level. For sure.
That's the most important thing. I mean, the absolute most important thing is good tenants. Everything else is secondary. If you have good tenants, then your life becomes pretty easy. Good tenants call you when there's a maintenance issue. They pay their rent. They're communicative. They're not drama. They're not hassles. They watch the property. They watch the neighbors. They're great. Good tenants are the basis of that. And with that comes the good processes involved in finding those tenants, but also helping retain them and keep good management processes aligned as well. So it's all connected. But yeah, it starts with that is the root of it all, is good tenants.
Yeah. And, lots of the viewers and listeners, they have a handful of properties. I get emails all the time. So what sort of tips or advice would you give those people where they're looking for their first professional management company to work with?
I would suggest interviewing, a few companies and making sure that there's a good goal alignment and a good fit, and you feel comfortable with the people you're talking to. And then start slow. Go with one or two properties and then go from there. I mean, anybody I'm partnering with or working with, somebody came to me and said, "I want to put 40 properties under your management." I'd be like, let's talk more seriously about that. Like
Yeah.
that's that's something that could end up being really ugly, really fast, or really awesome. But rather than do that, take your time and get to know them and make sure that you vet them out well and let them vet you out well. Make sure it's a good fit. There's a
Yeah.
lot of different philosophies of management. Like, we believe in safe, clean, functional housing. We believe in providing slightly better properties in the vernacular of an area for our tenants with a little bit below market rate rents. So sometimes you have a property that we're renting for 700, and the people come in and they're like, "Well, I want to buy that property and I want to raise the rents to 850 right away." And I'm like, that's not our management philosophy. We're not trying to squeeze maximum dollars out of the property. We're trying to maintain long-term tenancy with tenants who don't want to move. So, for example, $700 a month, if we have a slightly better property than the other properties on an area and we're renting slightly less, if someone gets behind a month or has a little bit of hard times, they're not going to want to move. But if you're at $850 a month and you're charging more than other local properties, you're dealing with filtering out your tenant base, and you're getting people who can fog a mirror and have a pulse, but maybe not much more than that. And they look good on paper, maybe. And you get them in there and they first payment default. I mean, nobody wants to deal with that, but there are certainly owners and owner mentality with a lot of experience in low income housing where they want to push the rents up to get an extra $100 or $200 a month, and all you do is crush yourself with that. So I realized from an income approach to value that increasing rents is one way to improve the value of a property. But in my opinion, long-term stable income is much better than short-term on paper profits.
Yeah. And so are you, when you're holding properties, are you holding for, let's say, a 10-year cycle, or what's your hold philosophy?
So we have two hold philosophies. One is if we have an asset that is super, super deeply discounted and it's a strong, strong cash flow play, then we will hold that indefinitely with no possibility for exit or no plan for exiting. We're just looking at it as a long-term hold.
Yeah.
But most of what we do is we buy on the edge of hip, is what I like to say. So we buy in areas that are starting to experience a little bit of the appreciation curve, where they're starting to trickle and they're no longer flat. Much like the whole nation for a long time, after the Great Crash was flat for a couple of years. There's that long recession, and then values started to improve. And in many neighborhoods, many cities, many areas, Miami, Phoenix, Las Vegas, San Fran, the values are well above pre-crash peak throughout the market. Here we've got that in pockets, but there's still plenty of parts of Detroit that are at their trough still. Now they're just gurgling down there. And I think that in much of the city, it's always going to be like that. They're never going to come back. But there are plenty of other areas of the city that are coming back kind of neighborhood by neighborhood. And what we like to do is go in the areas that are super hot and look at where the path of progress there is and what are the next hot properties that are going to start trading are, and kind of not really speculatively, but looking at the data that supports it and seeing trends and then capitalizing on that. So we do a lot of data analysis in neighborhoods and look at a number of metrics and factors that allow us to calculate where we want to put our investment dollars. And then on top of that, there's a qualitative analysis where we're on the streets here, so we drive, ride our bikes, participate in frequenting the establishments in neighborhoods, and kind of get a feel for them before really committing to any specific neighborhood.
Yeah, and that just highlights the importance and how real estate is hyper local. We're not talking about a city; we're talking about specific neighborhoods within that city, and how one or two neighborhoods over can mean a big difference.
Well, one or two blocks over can
Oh
make a big
yeah,
difference here. I mean, Detroit is very much, even in some of the transitioning neighborhoods, is block by block, where you can have a really good block and then a bad block and then a marginal block and an okay block and then another really good block, all in the same neighborhood. So, you've got that hyper local. It's certainly challenging sometimes, but the rewards are through the roof. I mean, we consistently do very, very well.
Yeah. And yourself, have you developed any routines or rituals that you think have helped make you successful?
Personally,
Yeah, personally and business wise.
Personally, I don't drink and I don't use drugs anymore. I've been clean and sober for over 20 years, so that has a massive impact on my lifestyle. I have three basic rules. Number one is that. Number two is um, do the next right thing, even if it hurts. And number three is clean up messes when I make them. And that's how I live my life. Those are my basic daily mantra rules that I live every day that way. Um, I try to meditate. My wife certainly does it a lot more than I do. Stretching, walks, bike rides, daily bike rides, at least 9 months a year. I'm trying to get out every day and ride. Um, that's from a personal standpoint. As far as business goes, I try to compartmentalize my emails. Email's highly addictive, ding, ding, ding all day long. So I try to do it in batches, probably about 3 or 4 batches a day. I no longer get up in the middle of the night and check my emails as a general rule, but it does happen from time to time. So there's that. I follow the structure that I talked about, the entrepreneurial operating system, the EOS, where we have our weekly operations meeting on Monday morning. We have a weekly sales meeting on Friday for the sales tasks. We have daily briefs every morning at 9 a.m. where we go over everything that's going on as far as deals in play for the day. We have a sales coaching call every Tuesday morning at 8:30. So it's really, people talk about being busy and say busy, busy, busy. And I'm like, I don't feel busy. I feel structured and scheduled.
Mm-hmm.
But I've got to the point where I'm going out of town in a couple of weeks and I'm not even taking a computer with me. I'll have my phone with me, which is obviously a semi-portable computer, but I'm not taking a laptop, and I'm going into a place in the country up in the northern Michigan, where it's sometimes challenging to get decent reception, certainly for any kind of real data transfer. You can make calls and texts. So, but I have a team that I know that things are just going to hum right along while I'm gone. And when I come back in a week, there'll be 1,400 emails in my inbox, probably more.
Yeah. And, sometimes it might be tempting just to hit delete to all 1,400.
Yeah, no, I just run through them, and most of them are, there's a lot of them that are arguably can be ignored, but certainly anything that comes directly where a person actually typed it out, I respond to. I'm really, really focused on, I think that the reasons for success in the business it doesn't come down to high tech, which we have plenty of tech. It doesn't come down to data mining and artificial intelligence, which we use and have adopted in our business. It doesn't even come down to handwritten processes that drive the business systems, which we have that as well. We've got, a process booklet that we use that runs our operation, and we revise it as time goes on. What it comes down to is good follow-up and personal touches and connecting with people that you're working with one-on-one. Those are the ways that I think that we are successful and will continue to be. It's all about follow-up. It's so easy to be disconnected and generic with all the technical aids that we have now. That I think the face-to-face, the one-on-one, the phone calls, those are really the keys for doing business. Yeah. And we're able to do that because we stay small as far as the number of, we don't have 1,400 clients. I do get 1,400 emails a week, but most that's just chaff. Yeah. But as far as client base go, we're dealing with hundreds, not thousands. So.
Yeah, no, those are some really good tips. So let's talk about a Keystone deal. So a deal that made a big impact on you and your business. Is there one that comes to mind?
Sure. So the El Mirado Apartments, we bought on a short sale. It was a 32-unit apartment building, 28 apartments, 4 storefronts. We purchased it in the fall of 2015. It was a 32-unit building for $115,000 on a short sale from a bank in Denver, Colorado. We put $89,000 into it. When we bought it, it was limping. It was 50% occupancy, 50% performance. So 25% economic performance. It was very distressed. Yeah. But structurally, the building was sound. We went in and we replaced the boiler. We put a roof on it. We did a lot of roof repairs. We didn't put a whole new roof on it. And went in and one of the biggest expenses was that there were no, each unit had its own cook gas, and there was no gas shutoff valves in any of the units. So we had to go through and replace all of those. We did some plumbing. We did some repairs. We got the bad tenants out. We cleaned up the building, got new tenants in, got the building in the 90s as far as performance goes, and within 9 months had it up and running, stabilized, sold under contract, and closed. And we sold it 9 months later to some Chinese investors for $737,500.
That's great.
So, kind of a home run.
Oh, for sure. So, like, when you're tackling a project like that, where it's obviously in distress, and you have to do some really heavy lifting in terms of changing out the tenant profile, like, what's your game plan there? Do you just do you try and do the purge right off the bat, or what's your plan?
Yeah, if you have some good tenants in there, you take a little bit of time to find out where the good is and where the bad is. And the thing is, you come in and you say you're going to change things and make them better, and you talk to the tenant base. And we just did this again on a 15 unit in a much nicer neighborhood. This was in the armpit of Detroit. It was in a really, really rough Class D neighborhood.
Yeah.
But we typically don't operate in those neighborhoods. We operate in a little bit, more of a C grade neighborhood. But we have one that's in a rapidly transitioning, gentrifying neighborhood of 15 units now. And the thing is, we go in and we talk to the people there, and I personally get to know some of them and give them my cell phone number. And, you end up with people in the building that communicate with you and say, hey, this tenant's, letting in druggies late at night, or they're bad people and they're causing problems. And, there's people that want quiet, peaceful enjoyment of their units, and they deserve it. So we make it so that it happens. We create that environment of, a place you can call home.
Yeah. And I think handing out your cell phone number, that creates automatic trust between you and that tenant.
Yeah, I don't know. It's a place to start for sure. I think the trust is gained from doing what we say and, following through on things. But yeah, I don't pretend I'm just here, that I'm the caretaker, I'm just an agent or whatever. If I have an interest in a building, I let them know, hey, I'm one of the partners in the building, I own it. And if I talk to someone personally, I give them that personal feeling like, hey, if you have a problem, you can come talk to me about it. And, I do have gatekeepers, so I'm not the easiest to access, but I'll roll by the building and say hi and what's going on. And they'll call me and I'll forward it off to the people that handle those things. So it's not that cumbersome. Like I said, we're small. We're a boutique organization. So we're not looking at 40,000 doors. I mean, we've turned, a few thousand doors over the years, but really, we're not looking at that kind of massive growth and ownership. We're looking at really doing quality stuff and having a consistent growth and an ease of lifestyle. Like I said, the freedom that's created from this business model. Now, at the same time, we're looking at scaling our operation, and that's a whole nother story. But I don't expect my lifestyle really to change as we double, triple, or quadruple, or even 10x our volume.
Yeah, and that's that must be almost like a tightrope to walk along. Where you want to keep that boutique feel, but also scale. So, how are you handling that as you grow?
That's a good question. We're not quite there yet. So we're still operating exclusively in Detroit and focusing almost primarily on Class C assets in the city. We're just now starting to expand as the market's experienced a bit more of a shift to doing what I would call traditional retail flips, where we're doing more of those. So, we've had success now. We just had, right before this call, one of our more recent ones that went highest and best for Thursday this week. And it's only Tuesday, and we've already got full price cash offer, which I think we're going to move forward on.
Nice. So
we rehab with the same kind of mentality. We want to be a little better than everything else in the marketplace, priced right, and we stage them well. We professionally photograph them, so we spend another couple grand on the back end making sure that. My theory is it's like you're up late at night, you're scrolling through your phone, doing the thumb dance on Zillow as just a home buyer, and we want to be the beautiful property that pops out. There's plenty of analogies you can use there, but I mean, whatever you want. You're in the pet shop, and there's one perfectly washed dog with a nice bow on, and there's a bunch of other mangy mutts. You're going to look at the pretty one, and it's going to be like, that's what I want. And the thing is, when I talk about competing when markets transition from cash buyers and cash investment properties to the leveraged traditional finance buyer, the difference for me between an $80,000 house and a $100,000 house is $20,000. The difference for a traditional home buyer between an $80,000 house and a $100,000 house is $62 a month. So when we go into those markets, I'm looking at what is the top of the market, what is the top quarter, what is the top 5%, what are the top selling houses, not necessarily even comps, but what are the top selling houses a little bigger, a lot smaller? What's the best looking product in this area? And then how can we deliver that product at an attractive price where we're not coming in and getting hammered on appraisals, which happened, unfortunately. I'll give another story. We had a house that we got for $14,000, had a $15,000 back water bill on it. We got on a quick claim deed. It was totally like a bottom end dredge deal that we went in and rehabbed to the nines. The rehab took way too long. This was many years ago. The rehab took far longer than it should have, went over budget. And at the end of the day, we had it. It was listed for $99,000, went under contract at $108,000. We're at the end of the rehab. I'm like, I really want to put that egress window in the basement and turn that back office room that we created there into another fourth bedroom. But I'm like looking at the comps. I'm like, it's not going to comp out. Like, there's no point spending the extra $4,000 to add the fourth bedroom because it's just not, the values aren't going to come on the appraisal. Turns out $108,000 under contract, appraised for $92,000. So we ended up selling it for, unfortunately, $92,000. Couldn't get anybody, because that kind of low end first time home buyer market. Couldn't find anybody to bring cash to closing. And we got hit pretty hard there. We made money on it. It was profitable, but that's $16,000 that was left on the table because we over rehabbed. Yeah. So lesson learned, boom.
Yeah. But and
keep it realistic. It's really tempting when you're doing rehabs, especially when you're new to it. And I was new to retail flips then. It was 5-6 years ago. It's really tempting to just think about like, I want to do this and this and, click. This is how we want it. It's going to be amazing. And then it was amazing, but there's no market values to support it. So now we try to keep things in the scope of, what's the market? Let the market dictate it, because at the end of the day, the appraisers determine what properties can sell for on anything that's leveraged.
Yeah, no, absolutely. So Brent, how has getting into real estate changed your life so far?
It's changed everything. I mean, the freedom to, I don't have so much of that anymore, but the freedom to work when you want, how you want. Like if I needed to leave, I could end this podcast and I could go away for a day, and I don't really have anybody to answer to there. So there's certainly that element of freedom, both financial and with my time for sure. And then the ability to take something that is kind of trashy and beat up and turn it into something that is beautiful and provides joy and people love, whether it's an investment property or a home. It's kind of a good feeling, from the apartment buildings all the way down to just single family houses. We're builders, we're developers. We're turning nothing into something, or we're turning something that's been abandoned and neglected and turning it around and making it something that is a productive asset for the owners and the community. So it's bloom where you're planted, that's what I'm doing. And it's really, there's a good feeling to that. And it's really an underserved market, especially that Class C market. You end up with a lot of people who want to get 20-25% return, which is by and large pretty much unrealistic for any kind of long-term rental. It happens from time to time, but it's certainly unusual to maintain consistent 20+% returns on cash flow income on low income housing. You've got to really, really buy super low. But in some cases, even if you got it for free, it would be difficult to get that to happen because there's just so many hurdles that you need to overcome. But when you get something humming and you can generate 13, 14, 12% consistent returns on multifamily units or a package of portfolio of single family homes in what is a marginalized neighborhood and provide quality housing for people who come in the office and bring you baked goods and say, hey, this is awesome. I love living here. It's a good feeling to know that you can contribute in that way. The more people I help, the better my life is.
Yeah, no, that's what it's all about. And looking ahead, let's say 10 years from now, where do you see your business going?
10 years from now, by then, hopefully we'll have done either an IPO or a sellout of a massive amount of it. Yeah.
Nice.
And we do have ambition and vision. So.
Yeah. So I'll be talking to you on a yacht as you're sailing the ocean.
maybe, or maybe just a little sailboat, skiffed away somewhere.
Yeah.
Or just right here in Detroit. I don't ever plan on. My wife and I just bought a new house, and we looked at it and considered things, and we could have got something bigger or more substantial. And our kids are getting older and going into high school now, and we talked about it. And I'm like, I don't want to go through this moving thing again. This is awful for us. For me at this point in my life, I'm just done with it.
Yeah.
So we're not moving again. This is our home. We may have a vacation home somewhere, but we're not moving anywhere. Detroit is our home.
Gotcha. That's great. Well, Brent, if somebody's looking to get in touch with you and learn more about what you're doing, where can they find you?
Send me a text or call me on my cell phone, 313-461-6747, or you can email Brent at IPS Realty. That's Investment Property Systems Realty.com.
That's perfect. Well, I just want to say thanks so much, Brent, for taking the time today and sharing your success with us. And to you,
thank you.
Yeah, pleasure's all mine. And to you, our reviewers, I wish you well on your journey from purchase to profits. See you next time.